to Stock Charts Trading. Today we're going to be taking a deeper look at the currency wars video that we just released. And so right here you can see that we have /6A. So as you can see, 6A has a downtrend and we just busted out of that downtrend. And so now we have an uptrend. Now we don't know exactly how far this is going to go up. Is it going to go all the way back up to these highs right here? We're not exactly sure, but we can anticipate at least and trade into those highs. British pound, SB, which is a futures, we have a head and shoulders pattern right here, which gave us a higher low, took off, broke through right here, and so we know we're in an uptrend. Here we are, we have the downtrend again, we have a double bottom coming into this resistance, hopefully it'll break through and give us higher highs. Here we are on 6C, we have a double bottom, we're right here at resistance, getting ready to break through and hopefully make higher highs. The euro downtrend, we've already broke through nicely. The Japanese yen, we've been going sideways, we just broke out, so we should expect higher highs. Swiss franc, we broke out and now we're making higher highs, so we are in an uptrend. Now that was the 20-year weekly chart, so let's break it down to a smaller time frame so that we can trade it. Now that we've defined what is going on in a 20-year week chart, we're at an uptrend, we've broken out, we're back to the Australian dollar. And you can see that I put on here the LRC, and the LRC is giving us an uptrend, which we already are confirmed. And then you see that here's our support line. That was the breakout line of that wedge pattern. I'm using two LRCs here, and I'll show you exactly the numbers that I'm using to get this on your charts. Okay, here we are on the studies tab, and you can see it's linear regression channel variable, because the variable is that you can change it. And so you can see up here, I've gone to a 115, and that's the outer band, and then I've gone to a 70, which is the inner band. Now, typically this would start at 100. So I went to the 115 because I'm looking for an extraordinary outside price point. And then at the 70 is kind of more of a typical price point that price should come down to. As you can see, that price came down, but then it hit this 70 LRC level, and then it made a nice up run. And that's just some of the things about trading. You're not going to catch every trade. Actually, I think you should catch less trades, but have a good quality trade when you are trading so that you can feel confident and confirm that with money in your pocket. There's nothing better than your portfolio growing. If you're just trading to trade and taking any trade, then you're just betting and gambling. But if you can be defined on when you enter and be very selective, now you're trading. So here you can see that price came below our 70 line. And then what I did is confirm that 70 line by putting on this diagonal line and waited for it to break resistance. After that, you can see that price moved off those lows upward, making a leg 1. And then right now we're pulling back into a leg 2. So what are we doing? We're looking for another entry point right upon this 70 LRC level. So what are we going to do? We're going to draw a trend line just coming across, making a resistance. And then once it breaks that resistance to the upside, we will get in. So we're going to wait for a close of a candlestick above this line. And we're waiting for it to come below the LRC. Okay, now that we have our entry area defined right here, we're going to look at our targets. And so our targets would be back to the old highs, right? That's an easy, no-brainer, average Joe. Hey, let's just get back to the old highs. Maybe it might make a couple of handle pattern. And so right here at the old highs, that's a great place to go ahead and take the profits of your trade. Next place would be at this 70 area, LRC, or if you want, wait for that 115 LRC. Now, just for me to be clear about the 115 LRC is that it is an extreme outside number. And so price doesn't really hit that all that often. When it does, it's an automatic buy for me because I know that's such an outside extreme. But you have to be, I have to tell you, if you're using for a target, basically you'll come real close and then what, right? So this came real close and then what? It pulled off, and it took a long time for it to come back up into these highs again to take your profit, which then brings you right back to this pattern here, which is back to the old highs. For me, I'm good with price coming into this box and then taking a target at this 70 LRC level. Most of my trades are spread trades, and so I just need the price to stay above right in where I entered. And so by the time it gets up to here anyways, I'm already probably 80% win ratio. I've probably already earned up to 60 to 80% of my reward on my trade. The great thing about this, it's a fairly quick trade. I don't like being in things for 3-4 months because so much can happen. You know, you're going to go up, you're going to have pullbacks, you're going to have jumps, you're going to have gaps, you're going to have all these things. And so for me, I like the shorter term trades. I like to get in, get out within a week or so. So you can see that this took place on Friday or Monday, and then here we are on Friday or Monday, and it's confirming again, hey, look, price is coming down into this entry area. Get ready for a up run. All right, here we are on the British pound. You can see that we have an LRC that says up trend. So we're going to take all of the lows and we're going to let them run into the highs and sell. We have our confirmation of breaking that resistance, and now we're coming down to support of that resistance, confirming we are also in an uptrend. As you can see here, this trade happens over and over. So here on Friday, came down into our area. We did not buy once it touched the 70 LRC line. We waited until it broke our diagonal resistance line, got into the trade. Here we are again. Thursday, a week later, giving us another signal. Look at this run up into this area here, giving you a huge move. Now, what's happening? Well, guess what? Right here, you're entering into an area, and what do you think is going to happen? That's right. It's going to go back into these highs, into these resistance lines of this LRC channel. All right, here we are on Canadian versus dollar. You can see that here is the resistance line. This is a long-term resistance line. And so what happened? Price came right up into that resistance and then fell off. And that shouldn't be a surprise to us. Why? Because it's under this resistance line. If it was over this resistance line, then we would expect for it to bounce off and go up. Here we are, depending on how analytical your rules are of waiting for a candle to close below that 70 level, or can it just touch and draw the line and have the breakout? Right here, you have another one, came down, touched, you have a breakout. Right here, you have another one. 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 So if you would have got into this trade right here and you would have took your profits up here at the LRC, you would have made $1,250 off of your cost, which is about $1,750, which just trading the futures would then give you a 72% in just a week. When's the last time you made 70% on a trade just in a week? And it happens over and over and over. All right, here we are on the EU. Here's our resistance line. We broke through that resistance line, so we know we're in an uptrend. LRC is showing us an uptrend. Here's potential to trade, maybe not. Here's potential to trade, maybe not. Depending on your rules, there's so many entry points, you don't have to be that aggressive. Speaking of which, entry point. But the thing I like about this is your stop loss is very small compared to your gains. So even if you were to say, if I break out of this downward 115 LRC line, then your losses are very small compared to these huge gains right here. Japanese yen, LRC, uptrend, break this downtrend resistance. So now what do we have? We have an uptrend confirmation. Price breaks below the LRC 70 level. Price breaks below LRC 70 level. Price breaks below the LRC 70 level. All of these are great entry points. This is a no-brainer. You enter and trade. It goes above the 70 LRC on the opposite side. You exit the trade. Here, you enter the trade. It doesn't quite go up to the LRC level. So now what? Well, what do we know about support and resistance, right? We could draw a line and say if price comes down to this line again, we'll buy more. You could draw in a rule and say as long as I stay above a 35-degree angle, then I will stay in the trade, but as soon as I break that 35-degree angle, I'll get out. You could also use the LRC as it goes up, draw in these lines to have it be a support level stop. By the way, did I mention that this would be a good place to buy? And here we are on the last one, Swiss franc. And we don't see the line because we've broken well through the line and we're making the uptrend. You can see that the LRC is confirming the uptrend, showing this upward diagonal entry point right there. entry point right there, entry point right there, entry point right there. Not all entry points are going to give you the same exact move, but your likelihood of up trades from these lows is highly probable. I can't confirm that you'll always make 60 or 70 or 100%. I don't know what trading system you're using. Are you using options? Are you buying stocks? How are you trading things? And so I can't do that for you in trading. But what I can do is give you the understanding of momentum and how it works. Go back to our 5 rules of trading video. We have trend, we have momentum coming down. Our price is going to come into these highs here, which you can measure. You can use these old moves to measure the time and how much it moved. Everything you need is right here in this trade system. So like and subscribe, stick with us. We'll keep on going through these price points and how to trade, because you can use this on currency, you can use this on futures, you can use this in stocks, you can use this in options. There's so many different ways to use this, and any way you do this, it's going to help you understand what, why, and when you're making the trades that you're trading. Until next time.